So we have two strategies that we implement in the room. We have what's called an LG1, LG2 strategy. One is with trend, overall trend, and one is when there is a trend change or what's called a failure trade for the LG1. So we have an LG1, LG2. So I want to go over those, but before I go over those, before we use these strategies, and we're going to go over some trades today, the one thing you want to do is we use this. It's a free website, forexfactory.com. We want to find out when news comes out, and you can print this out for the entire trading week on Sunday night, or you can keep it on your computer. Easy way is to print it out, or just make sure you look at it on Sunday night. Make sure you write these down. These are red impact numbers that come out against the USD. So go to forexfactory.com, go over to this little filter, click this little, looks like a tornado, this little filter, funnel, and click only the red impact news events. Red impact news, not the orange, not the yellow, not the silver. Just click the red and uncheck everything, the Aussie, the CAD, the Euro, Pound, Yen, New Zealand, uncheck all that. That's for mainly Forex and pair trading. We want to check only the USD. So any news against the USD and a red impact, and apply filter. What you'll get is you'll get these red impact levels. And that's directly going to affect when you want to turn these strategies on or you want to turn these strategies off. So you don't want to use these strategies. We have two strategies that will get you in with an entry, a stop, and the targets. And today we'll go over that this morning and just go over how to turn those on, how to turn those off. We'll go over trades today as the Fed is coming out today at 2 p.m. So if you look today, Wednesday the 29th, right now it is 8:09. So that's the first thing you want to do. First thing before you start looking at these markets or whatever market you look at, whether you trade crude oil, whether you trade, the S&P, the Dow, Euro, whatever it is, you just want to make sure, especially if you trade the S&P, you want to look at NASDAQ futures. You want to look at what against the USD to make sure that it's not directly going to affect it. So if you look at the calendar for the week, we have today, January 29th, the Fed fund rate for interest rates come out at 2 p.m. So what that tells us is at 5 till 2 and 5 after 2, you should make sure the strategies are toggled off just to make sure that we don't want to get into a situation where NinjaTrader cannot stay up with if the market gaps up or gaps down and gets into a fast movement. Typically right after a news event, you get some erratic moves. So the rule of thumb, 5 minutes before, 5 minutes after, you want to shut that off. So tomorrow we got GDP at 8:30. So at 8:25, make sure it's off, or if you're in a position, get out and wait till 8:35 and start stalking trades again. And then at 8:30, we got the price index at 8:30. So just go to forexfactory.com, hit the funnel, red impact numbers. Like I said, it's very simple to do against the USD. And that way we don't get caught trading right at his news event, meaning if it's 7:58 today, 1:58 today, or 1:56 or 1:57, and a trade comes up and the Fed fund comes out at 2 p.m., you don't want to get into the markets. Okay, so we do have two. I want to go over this and we'll start stalking trades this morning. I'll make this video short. Tomorrow I'm going to go over longer Renko charts that we can use, where we can use these strategies more around the clock, where you turn them on and let them run for a certain period, 9:35 to 11, or 12:50 to 4 o'clock in the afternoon. We'll go over that, and I'll do market replay tomorrow right at 8 o'clock. We'll record that also. We'll do that and show you guys how to do that tomorrow morning. So we'll make sure we'll go over that. But today we'll go over how you can turn the strategy on, turn the strategy off when certain criteria happen. So we have what's called our dual trend filter, and this is this chart to the far left. This is on the S&P, and we'll start stocking trades this morning. Right now we're looking for a sell setup, so right after this video we'll start stocking some trades. So what we want to do is we want to look at this dual trend filter. On the what I have a zone. This is our outer zone, and this zone should repel price. If the S&P comes down to it, we should come right out of it according to all the data that we run on the S&P. If this outer zone is green, we're only looking for buys. If it's red, we're only looking for sells. Very simple. Then we have these inner dots. This is my proprietary Renko bar type that we created. And in that, what that does, it tells us if the market is what's called a dual trend filter. We got the outer zone and the inner zone. If they're both green, and we have this in the PDF on the members download page. We go over it in great detail. All this information I'm giving you, it's in great detail in the PDF. If it's green, we're looking for buy setups. Now the reason I'm showing you this, as this happened yesterday, I was going over this in the room when I got back in the room yesterday. And when you see green come in, what happens is you're into a trend mode. And when you're in a trend mode, we're looking for what's called a V bottom. A V bottom, we're looking for a retracement, red candles that come in, or red bars that come in, red Renko bars. And we're looking for a V bottom. We're looking for this yellow trigger to fire, like yellow trigger and entry to fire. And after that fires, what we can do is we can toggle on, by a matter of a click of a button. It takes one click to turn the strategy on. Simple as a left click. You would turn the strategy on after this V bottom. So this chart in the room, the bottom right is where our liquidity grab trader we use coincides with this V bottom here. So this V bottom coincides with turning the strategy on. So you turn the strategy on at 12:55:01, and what it's going to do, it's automatically going to look for the first liquidity grab after the V bottom. So it's going to pull you in at 8 minutes later. 8 minutes later, it pulled you in at 1:03:09. Because this is a V bottom and you're green. So it's a matter of simply clicking on, clicking it off. And why that is important, because the strategy, the advantage of the strategy, it's an order management system where it's automatically going to get you in the first liquidity grab after the distortion in price, the pullback. So this is where they caught the counter trend traders. They pulled the market back. You see this big distortion in price. They pulled it back, caught the counter trend traders. They took order flow in. These order blocks, buy order blocks, they were buying the dip. And you know they're buying the dip because it came back closed green. Once it was a red bar closed back green, you know you just caught the counters in the market. The strategy will automatically get you long. They'll place your stop, and then they'll go for your targets. The risk that you take with the system is between target 1 and target 2. The entry and target 1, and then it's break even plus 1 after that. That's the risk you're going to take in the market between this and this. So once you hit your target 1, we educate traders, go for 4 to 12 ticks on target 1 on the S&P. 4 to 12 ticks is a great spot to look for. If it's zero turn candles like this, and this, I'm going to go over a zero turn candle. This is the best setup you're going to get in the trading room. And if you want to sort of cherry pick trades, when to turn this strategy on and manage positions, there's one way to do it. If you are green and we're in an uptrend, and we finally get a first retracement, a red retracement, if it holds above, it's already green, if it holds above these inner dots, and we don't close by more than 2 candles below these inner dots before it gives you a yellow trigger entry, then what that tells you is that tells you that you have a strong market. They're going to try to mark the market up. When these liquidity grabs happen, they happen between the V bottom and the Momo 1. The Momo 1 happens right afterwards. On our old style trading in the trade room, we used to buy this momentum 1 because the market has momentum. Now we have the advantage where the liquidity grab happens between the V bottom and Momo 1. The liquidity grab is happening right after the V bottom. So you should be scaling. So rule of thumb for traders is you should be scaling on the Renko size you use. If you see a momentum 1 come up, you should be scaling right into momentum 1 for target 1. So you'll notice that right when this came up at 1304.06, you should be scaling right into your first target between the 4 to 12 tick range. The reason I said this is the best trade setup you're going to get in the trade room, a zero turn means when this hammer comes up on a V bottom, you'll see it's like a doji or a hammer. If it turns yellow, they're really trying to mark the market up. If it's green, not if it's red, where the trend filter disagrees and we're in chop, but I'm talking about if it's green or red. So we like to see this yellow trigger fire at least in the first 3 candles after the zero candle, which is the hammer. So the count starts at 0 here, 1, 2, 3. And so if you get a yellow trigger within 3, that's a qualified V bottom. A great time to turn that on. So that's when we want to turn it on the zero candle. So that's the strongest position you're going to have in the market when you're above my inner dots. So that's how it's called an LG2. So a zero turn candle above inner trend dots. I went over this yesterday when the market was moving. Got it in. How about this setup by going here, what's called a failure setup, where you can turn on the LG1 strategy. When you want to turn the LG1 strategy, so we have our outer zone, right? Our outer zone. If we start closing outside of our outer zone by more than 2 candles, you're going to see this yellow trigger fire outside of my zone. This is called a failure setup because now we're going against zone trend. Okay, now you're getting zone trend, so you're going to get this this trigger candle that fires. Then you can turn on what's called our LG1 strategy. What's the difference between liquidity grab 1 and liquidity grab 2? Liquidity grab 2 strategy, and you can have them on 2 separate charts on your NinjaTrader, and just it's a matter of, like I said, clicking on and clicking off. So what you can do on your failure 1 strategy, the best time to use it is after a failure trade is occurring, when you're closing outside of the outer zone. Why? The difference between a liquidity grab 1 strategy and liquidity grab 2, all members have this, is that LG1 takes every single distortion of price and it will get long. So what it will do is it will look at every distortion of price here, every big liquidity grab, the big liquidity grabs, and it will get long the first distortion of price after you turn it on. Why is that important on a failure trade when you're closing outside the zone? Because what I want to do is I want to try and get long the market on this failure trade after this yellow trigger comes up on LG1, because it's going to take the first liquidity grab in between here. Where the difference between LG1 LG2 you only want to do it with trend, because it's only going to take the first liquidity grab after a trend change. It won't take any more. So in this big move up after the V bottom, it's not going to take any more trades. Right? So we have to remember that. So that's called an LG1. That's called an LG1 versus LG2 strategy. Okay? So right now, as price is ticking right now, you'd be short the LG2. I mean LG1 strategy. So as we're moving now of live price, let's take a look at this real quick. Make this simple. So when you see the first, this is live data right now, and we'll look for live trades like this all day today, the same exact way. Once you start closing below, 2 candles below the outer zone, you're going to get this yellow trigger that fired right here. It's called a failure trade. You can turn on the LG2. I mean, sorry, LG1. LG1 is with failure trades. LG2 is because it takes every single liquidity grab. So this will take, if you turn LG1 on, it's going to take every single liquidity grab on the way down. So why you want to do that is you want to try to get this move down. So the failure trade entry was this morning at 97. We're down to 81 already. It's fallen quite a bit since this morning, since 7:32. So the best time to turn on the liquidity grab trader on LG1 is you want to turn on LG1 if you are closing outside the zone. Now you know you're not going to close outside the zone. So let's say you got your trade off right here. It started at 7:32 this morning, and the LG1 got you short on one of these liquidity grabs. Okay, got you short at 7:32, so we got you short on this liquidity grab. Right here. So it got you short at this candle. Got you short at that candle right there. That's LG1 because it's going to take all the first, it's going to take every single liquidity grab that comes up. So short at the, so 96 short is where it got you short. It got as low as 82 so far. So it's just a nice trade on LG1. Why? Because you just got outside my outer zone, so you can turn the strategy on and try to get that failure trade. If you don't want to take failure trades, which it's what it is, it's a break outside my zone because my zone's been tested for 30 years as the best zone to hold price. So the reason I developed this zone, breakout zone failure trade was that guess what? If it's the best zone that we've tested for the past 30 years, using an AI program, then we know that if we get outside the zone, the market should move in the other direction. I mean, it's common sense. So if we get outside that outer zone, we're looking for a push down. All right. That's why I call it failure against zone trend. But now we're red. I got my outer zone and my inner zones now agree. So now what do we want to happen in the market? What we want to happen in the market now is we want to look for an LG2 trade. We want to see this market, and you can see it in my trade room over here as we're ticking. We want to see the market retrace and get a V bottom coming up. So what you can do is you're trading the strategy, you can turn the LG2 off and just wait. We're going to wait until we get a retracement in price. We're going to get a retracement in price. And then we're going to look for what's called a V top now. Now we're going to look for a V top. As long as I don't close 2 candles outside, because my outer zone tells you my threshold now. It's sort of the line in the sand in the market. Now I know the line in the sand in the market. I know that the market cannot close outside of 60.95 3/4 on a retracement. If it does, then I'm going to look for a possible failure trade or a trend change to trade LG1 to the upside. As long as it stays below 60.95 3/4, and I get a reversal bar, I start getting green candles. You want to see green candles start coming in. Then you can turn on LG2. And LG2, you're looking for a V-top, and it will take the first liquidity grab, the first distortion in price that we have. Now watch. It's very simple. Easy to understand. Watch this. So this is our zone. We start closing 2 candles outside the zone. We got a yellow trigger right here. This is liquidity grab 1 strategy. Toggle it on. There's your LG1 strategy. Got a nice move. Market followed through really nice to the downside because we're selling weakness. What the system does, we buy strength, we sell weakness. We don't try to buy the low or sell the high. That's for amateur traders. All these indicators are designed for you to lose. The market is designed for you to lose. They try to make you counter-trend trade the market by selling pivot levels, selling Fibonacci or buying Fibonacci levels in a downtrend, selling Fibonacci levels in an uptrend, buying and selling pivots when the market's in a hard downtrend. Well, pivot levels, they pause and breaks right through. Pause, breaks right through. We trade order flow. So right now we're in a hard downtrend. We're selling low and covering lower. You're selling low here this morning, and we're covering lower. Look how the market keeps tanking down. Where all these indicators that you get free for NinjaTrader, Thinkorswim, TradeStation, they're all designed for us to lose. Why? Because they're designed for us to try to catch this falling knife on the way down. Designed for us to look, oh, there's triple divergence on a fib level. There's triple divergence or divergence on a pivot level. The MAC is crossing up. The moving averages are crossing up. All this BS, it tells you one thing, it's not order flow. You're just trying to catch a falling knife, which is impossible. What we can do, though, these are electronically traded markets. The market is going to tell us and give us what it wants to give us. We're not going to tell the market what to do. We're not going to try to outguess the market by these counter trend trade indicators. We're going to let the order flow dictate when we're going to get in these markets. Very simply, if the market's going down, we're going to short. If the market's going up, we're going to go long. And we're not going to try to outguess it by trying to find a bottom or find a top. It's almost impossible to do that. But what we can do, these are electronically traded markets, what we can do is look at order flow. This is telling us when we broke outside of this outer zone, it told us it has now broke market structure. Market structure is broken. We're going to look for the first pullback in price, first distortion in price, and let our strategy get us in for this short. And that's where you get LG1. Now that we're starting trend, what we can do, now we're red-green, what we can do is we can look for trend trades now. So now we can look for LG2. So when we first get our retracement here, when it starts showing green bars, green candles, we're going to wait for the first V-top. You'll see it over here. We'll get a V-top. We'll start green, V-top, turn big red candle, wait for the yellow trigger. Then you can turn the strategy on like this, a one click of a button. It'll manage your entry, stop, and target. After you get your targets off, targets get off, you can just turn it back off. That's simple. So that's one way to use these strategies. You can use it with the break of our outer zone for LG1 to get this possible big move down or possible trend change down. And then the second way to use it is you can use it for trend only, where it's red, we're looking for V-tops, and we're looking for V-tops to pop us in the market. So right now, if you have LG1 and you still have a trailing stop, you're good to go. Now what some traders can do, if you want to trail your own stops, let it enter the market for you. Let it enter the market for you because it fills, that's the advantage of the strategy. You can turn the strategy off and you can manually adjust your targets that chart trader has up for you. And then the stop, you can adjust it as it moves down. Some traders do that also. They'll let strategy get them in. They'll turn it off and just manually adjust your trail stop to do that with the click of a button. Other traders will just let it hit its targets and not have any emotion in it at all. You have no emotion in it after you enter on an LG1 like this. You're either going to get stopped out or it's going to hit your targets. That's simple. Okay. So now we're looking for an LG2 strategy to fire us in the trade. We're looking for a retracement. Once we start getting a green candle, we start getting a retracement, we get a yellow trigger bar, you simply turn it on, and then you can let the market get you in. Okay. You see these pockets over here now. So we have two strategies that we use with our dual trend filter. It's that simple. Don't make it any more difficult than that. What we do is we have these pockets in the market. So we have a unique way of using these 2 to 4 hour profiles. I do not educate with a 30-minute market profile. It's too small and it doesn't gauge overall order flow and where these resting buy stops are and resting sell stops are. So what we do is we educate using these larger profiles. Here's our daily profile right now. This is our daily profile. There's a HVA, there's LVA. And by knowing the daily profile, we know that we have resting resting buy stops above us outside of daily HVA, and we have resting sell stops below us. Knowing that information before you start trading is very important because this is the roadmap of the market. This is not my opinion. It's not your opinion. This is all the market participants and the whole entire market. It looks at all the hedge funds, banks, right across the board, professional, amateur traders. Every single trade that the market is executing, it's going to give us a high value area, a control point where the most volume is traded, and a low value area. You can tell that my profile works very, very accurately. You can see it hit the top here 3 times, reversed, and then it hit the bottom, reversed, hit the bottom there, at the bottom here earlier, and then now she just broke. The reason it's important is this. The algorithms out there that control these markets, typically a lot of these markets are electronically traded and they're algorithms. The buy stops are going to be just above high value and the sell stops are going to be just below low value. So what that tells you is this. It's going to be a feeding frenzy to the downside or to the upside when they take these counter trend traders to the woodshed and they take order flow. What they're going to do is once they break outside HVA, they like to fill this big what's called trading gap in the market. What a trading gap is, that is where previous market profile has been on our charts. And that's why you cannot use, we educate not to use a 30-minute market profile. It doesn't show these big gaps. Our profile will show the big gaps. So I like to look at, number one, when is news coming out? So when you first log into your trading desk, let me find out when news comes in first because I don't want to turn strategies on 5 minutes before or 5 minutes after news. Check. Look at my roadmap. Where's the big gaps in the market? If I know the big gaps, I know if I break low value area here, now this is volume profile. Volume profile has been around since 1994, and these little dots outside of red dots and green dots are price profile. These little red lines are developing profile, HVA and LVA. So you have additional profiles on there just to show where there's going to be support and resistance. The main one's volume profile, shows you all the volume in the market. So I know then if I break 60.94.50, I don't have any participants in the market resistance till 60.81 3/4. So I got 95 to pretty much 82, 95 to 82. So it's very important for me to understand that because they'll let me know 95 with low value area here to 82. That shows me where the potential is going to be on these big runs in the market. So I know when I start breaking, and let's take a look at this and I'll show you. when I start breaking on these liquidity grabs on the strategy, I know pretty much where my final target's going to be with these tradable gaps. If you look at all my videos, we do tons of videos at daytradingthefutures.com. Go to videos, and I'll project these. Members will see it. I'll project these gaps. I just did it this morning for you. And I'll project them at 8:15, and 2 hours later, sometimes they'll stop within it. Sometimes they'll stop to the tick. Sometimes they'll stop within 2 ticks, and that'll be the high and low of the session. It happens over and over and over again. Why? That's not my opinion. It's where all the trading participants have been and are at, and that's where the order flow is. So it lets me know that now my resistance is now 82. So now I got 82 as my resistance. So as long as I stay below this tradable gap, what they're going to try to do is they're going to try to bring it down to this next gap of 64. So I got a big tradable gap below me now from 82 to 64. And how I came up with that number is yesterday's profile. That was the control point. That's the HVA. And right below that, I got another tradable gap from 64 down to 38. Why is that important? It's important because you get these big runs in the market when you get into the liquidity grab 1 or liquidity grab 2. So I can see the buy stops, if I get outside of 61.08 on the upside, I got a nice little run to 61.38. And then the breakout 61.38, I got a lot of open area above me. If I get below 82, we're looking for 64.37. This is very important information to know because these are all the trading participants in the entire world. This is your roadmap. This has nothing to do with our opinion. This is strictly order flow. So we know that that is a great tradable gap to look for if we ever break it to get a good run down to that target level to help us out. So for traders who got in the LG1 strategy on the downside, it told you that from 95, your target should be down to 82 for runners. All right? They'll let you know what your overall target is. Now, we can turn the LG2 strategy on. The best time to turn it on is when what? We start getting a retracement. Are we getting a retracement now? Yes. We're getting a retracement right now. We know we have a big opening gap below us. We're getting a retracement right now, so what would we do? If price stays below my inner dots here, trend dots, then it's going to be the weakest part of the market. We should see this market crash through this target of 82 and propel itself down to 64. All right, because that's the weakest part of the market we're going to look for. We're going to look for a red candle to reverse, which will be, it'll look like this. It'll be a V-top. We'll see a red candle come in, a yellow trigger to fire, and then we can turn on the strategy by simply just clicking on the strategy and firing in. It'll manage our entry. It'll take the first liquidity grab, LG2, manage our entry, our stop, and our exit. Now that's one way how to use this. We use a 1-1-20 on the Unirinco over here and a 1-1-20 over here. You can use larger Rinco sizes to run the system more around the clock. And we're going to go over market replay tomorrow and record it and how to do this. We'll go, we'll just take a look at for last week and play every single trade that happens. You know, we can't do a large recording, but members, you can go back on your own with these settings, which we'll send out to you on an email that we use. And you can replay it all you want for the entire month or 2 months or whatever. But for demonstration, I'll just go take every trade from last week, starting at midnight, running all the way, every single trade, 24 hours a day for the whole week. We'll run that tomorrow on replay at 8 o'clock before we start stalking trades again. And we'll record that for you. So there's 2 ways to use the strategies. One, you limited risk, right? If you use a 1-1-20, this is what I came up with when I tested the Unirinco bar types. This is my favorite bar type in our trade room for the S&P for getting in on these strategies. As far as the S&P goes, on getting in by toggling on or off, your stop's going to be wherever your reversal candle is, your tick reversal, your stop should be plus or minus 5 ticks from that as a rule of thumb. So if I'm trading a bar Renko reversal type of 20, most traders in the trade room will use a 15 tick stop on these setups. They'll use a 15 tick stop here on the LG1, and they'll use a 15 tick stop on the LG2. Some will use 16, 17, 18, depends when you do. The best thing to do on Renko bars, do not do historical data, do market replay. Market replay will show you exactly, and we'll do it tomorrow on market replay. I'll show you, and I'll show you how you would toggle this on or toggle it back off as far as that goes. So you don't want to toggle this on because on counter moves, we'll get the counter moves. So you want to toggle that off. You're going to wait until we get a yellow candle to toggle it on. Now this is very important. You can see it was trying to take the first liquidity grab long here at 84 3/4 LG2. You don't want to do that. Don't take the counters. What you want to do is you want to look for trend trades only because it's red, red. All right. We don't want to take the counter moves. What do I mean by that? Let's take a look at it yesterday. If I toggle it on, get this all the way. So yesterday, LG2 is going to take all count. If you have the trend filter off, if you have the without the MAs on it, it's going to take all counters and all with trend. Right? So if you toggle this on, it's going to take all counters against zone. This was against zone. This was against zone. But it will also take all the ones with trend also. How I educate traders to use the LG2 is this. Use the LG1 for the failure trades. If you're breaking 2 candles outside the zone, you get a yellow trigger. Toggle on LG1 to get these moves like we just happened this morning on that big push down. When the market's countering like it's countering now against zone trend, just leave it off. Just toggle it off. Wait for a V-top to come in. This is what looks like a V-top. A big red candle down. You can toggle it on, and then I'm just going to get you in the first liquidity grab trade like it did here from 45 all the way down to 37. Potential. Then when you get a V-top again, you get a V-top, you can toggle it back on and try to get a move down again for the move down. So these are trend trades. So there's trend trades and counter trades. That's a V-top. You want to trade the trend trades with the dual trend filter. Let the dual trend filter help you out by establishing when you should be using these strategies to fire in the trade. That's the best time to use the system. So the best time will be LG1s after you get a yellow trigger breaking outside the zone here. Let's say you get a big liquidity grab there. That's the 3 times you use this setup. Use it for your failure trades and use it for your trend trades with zone trend, the dual trend filter. I do not like using it for counters. Some traders like to do that. It's totally up to you. I prefer just toggling it on, toggling it off for the trade. So right now we're trying to do a V-top. So it would be off. We're trying to do a V-top. So as soon as this V-top comes in, it's trying to right now, are we in a weak position in the market? Yes. Why? Look at my inner dots. It's trying to turn. It's trying to close a red candle. It's trying to close a red candle right now. Once it closes a red candle, we're going to see if we get a yellow trigger here. We can turn on our strategy and try to get in the first liquidity grab short with the target all the way down to 64, our final target. All right, you can have your targets already in place on the strategy. So your targets will be already in place in the strategy. It'll look like this if you have it turned off. You can even mark these up. The target's 64 on this move. That's our overall target in the move. So we have a big gap in the market right here coming up. So it'd be simply a matter of what you want to do. Click it on. when the first liquidity grab comes in, not when the counter comes in here, because it's going to take the counters too, because you have it toggled off. Don't leave it just run. Toggle it off because it's going to take that counter. Wait, now you can turn it on. So then you can click it on there. Now what it's going to do, it's going to wait for the first liquidity grab here that happens. Now this is a zero turn candle. This is good because we have a weakness in price below our inner dots, our inner trend filter. It's a zero turn candle. We're looking for the first liquidity grab short now. So what we need to see is not going to get us short yet until there's a distortion in price over here. I want to see this market go back up and then close below this low, and then the strategy will get us short. Until it does that, this strategy will not get us short yet. It's still waiting for a sell setup. We are still waiting for a sell setup. So we are waiting until that market closes back red. Once it closes back red, we can look for the first liquidity grab short. So what we're doing, we're trying to stalk the trade. We're trying to wait. We'll leave this on here so you can watch the setup. We're trying to wait. The strategy is on. We're trying to wait for the first liquidity grab short. Okay? 1 second. So LG2 is on. Waiting for the first pullback in price, which we're getting. So if this market's going to continue to be weak and we're going to try to get in this opening trade gap, it's going to close below this low. It's going to close below this low. If it doesn't do it and we get a green candle, just turn it back off. It's going to wait for another V-top, right? But right now we're in a V-top. We've got the yellow trigger candle fired. See it over here. We're in a V-top mode. But it hasn't confirmed yet. It hasn't gave us a liquidity grab. Remember, the LG2 strategy takes the first liquidity grab. The first liquidity grab, that's what it's going to take to go short. All right, we're going to wait for that. Once it gets in, it will get short the low of this candle, which the fill is going to be right around 79.25 to 79. Should be our fill if they're trying to grab liquidity here. You know they're going to try to grab liquidity if this closes back red on our room charts. If it does not close back red and we close another green candle up, you simply turn it off and wait for the next V-top with trend. We're not worried about turning LG1 on. Why? LG1 on, you're going to have to come all the way up here to break two candles outside of 1692.50. What we're doing, we're trend trading right now. We're only concerned with taking this market short and trying to cover this opening gap of 64. So they're trying to grab liquidity here right now. So as they grab liquidity, it's going to go short. It will go short at the close of the candle. Okay, so that's what you want to look for. You want to look for a close after it closes the first liquidity grab after it closes. Now, this one hasn't grabbed. It's got to break the high for a liquidity grab. So this one won't go short. It's going to wait. It's going to wait for its first liquidity grab. This would have to exceed this high first, knowing it's grabbing liquidity, and then close below. So as soon as we get a candle that exceeds the high, grabs liquidity, closes back, it will get short the market. And that's what we're waiting on. We're waiting on the first liquidity grab short, and we're going to look for a 64 target. Now, I educate traders this. If you see a zero turn candle come in, you can just even trade the zero turn candle and put your stop outside of the zero turn candle. And just trade the V-top without even waiting for the first liquidity grab, because typically those are nice little moves in the market that like to continue. You can do that, or you can just let the strategy, you can wait for it, wait for the strategy to come up with liquidity grab, which we're waiting on right now. Wait for the first liquidity grab that comes in to get short the market like this. This was our failure trade this morning. We're waiting for the first liquidity grab. So there's a distortion in price right now. Now we're activated. If we close below the low of this candle, because it broke through the high, that means they're grabbing liquidity. And it will confirm they grab liquidity. See how it's breaking through the high. It'll confirm if we break through this low. So if we break through 78 3/4, I'm sorry, it will get filled. This one, the fill would have been right around 79 1/4, but it did not break through this high. So the strategy is not going to get you filled because they're not grabbing liquidity. When you see these buy order blocks and sell order blocks, what they'll do is they'll break through the previous high or low. Meaning what they do, if you noticed, they're grabbing these liquidity when you're breaking through these levels. Break the high, grab liquidity. Break the high, grab liquidity. Break the high, grab liquidity, turn it back red. High, red, high, red. You can see when they're grabbing liquidity on the way down. So right now, we're waiting to get into this opening gap sell. We're waiting for the close a close below this threshold. If it does, the automated system will get you short. That's how it's programmed. It will get you short right there at that level at 7,000 or 6,078 3/4 plus or minus a tick. Your stop will automatically be put in on the strategy, and then you'll have your targets here, 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 whatever your targets are. All right, so we have a failure where you trade the LG1 on the failure on the way down. We finally got a V-top that came in the market. There's our V-top. Now what we're waiting on after the V-top, we're waiting for the strategy to pull us in and break this low. We break 78 1/2. Strategy's turned on. It's waiting for a setup. We're waiting for a sell setup right now. If it closes back green, it may want to do a higher high V-top. It can go all the way up. We'll just turn it back off then. If this closes a green candle, you leave it on right now. But if it comes up and we turn a green candle, you turn it off until you get up to this zone. It can go as high as 92 1/2. As long as price doesn't exceed 92 1/2 and I get another V-top like this, I'm going to turn it right back on and try to get my targets off. So right now we're just waiting for a liquidity grab sell. We're patiently waiting for the strategy to pull us in. It's activated. It's programmed to know when the liquidity grab comes in. It's programmed to know when liquidity grab comes in. It's now activated. It looks like they're trying to grab liquidity here. Trying to take the counters out of the market. If they close it back below this low, the strategy you'll see will automatically get short. Okay. So just remember, there's two ways to use the strategy. You can toggle it on and off. One would be a failure trade. Use the LG1 for the failure to get this move here. When you're first closing outside my zone, you see a yellow trigger. You can turn on LG1 to let the strategy get you short there. Then when you turn red, red, because LG1s happen when you're in chop, right? Chop is green, green, red. That's not trend. That's chop. Failure trades happening when you first close outside the zone and you're going to turn red, green, not green, red. That's a chop market. That's when failure trades occur. Well, trend trades occur when you're red, red, green, green, and you get V-tops or V-bottoms. That's what we got right now. We got a V-top. We got a V-top. We're waiting for the market to pull us in. Excuse me. So now LG2 can be turned on. We got the yellow trigger, zero turn. We're waiting for it. Waiting for this candle to turn close red. Once it closes red, the strategy will get short. If it is wrong, you will have a stop in place, and it will stop you out at your predetermined stop. So if you have a stop in, wherever your stop is, wherever your stop is, that's where it's going to be. Oops, that's not it. Strategy's over here. So I got a 16 tick stop in this. Depending where your targets are, you can change your targets whatever you want. You know, you can even put your MA fast and slow in if you don't want to look for any counters coming in. Some use 2080. I like the outer zone, 54, 200, so I don't get counter moves to accidentally pull me in. A lot of traders just leave this off and wait for the V-top and just toggle it on. But if you leave it off, remember, it's going to take counter trend trades and trend trades. So you got to wait to the V-top, V-bottom, V-top. Some use my outer zone as a MA link, 54 over 200. It only takes trades in the direction of that trend. I'll go over that with automated trading tomorrow by letting it run. We'll go over that. But here's your hard stop when it pulls in. You can put it 20 if you want. You can change your targets to 4 to 6, whatever you want. So we'll just put a 16 tick stop in. We'll use an 8. First target, 10 tick, 12. We'll go 20. We want to try to hit that zone, that lower zone. So the lower zone is how many ticks. So if we get pulled in, let's take a look at this real quick. If we get pulled in, you can see where your final targets would be at 60, 78 3/4. The target is 64. So that 74 would be 10. That'd be 40 ticks. Another 4 would be another 20, be 60 ticks. So let's put our final target. You can put your final target to hit that zone. If you don't get stopped out on the runner, you can put that at 60 ticks if you want. It's going to be break even +1 after it gets you in. You put your final runner at 60 ticks. Now it's enabled. So now I know I got a final runner that can come all the way down to 64. All right, turn it off. Why? Because we got a green candle. So now we're going to wait until the next V-top. It'll look like this come in, and then we'll try to get short the market again.